What is going on, everybody? It's your boy CDG, and we're gonna go ahead and break down the NZDUSD trade that was taken on June 27th. Snipe of the day brought to you by yours truly. So we're gonna go ahead and focus. Well, first let's retrace into what I saw earlier today. 9 a.m. Awesome. So this now, you follow me on my Telegram, you're gonna see how I went ahead and I was dropping analysis earlier on the week, right? Somewhere around Monday, Sunday, where I highlighted this zone, which is a clear 4 hour, 1 hour demand zone. Sorry, I'm still getting used to abbreviations. So what I wanted to see here was price was showing grace build-up structure of weak hands, kind of buying up the market, getting ready to sell off if market shows a great opportunity to go ahead and short it, right? Now, although price did come into the original sell area based off of Sunday's analysis or Monday's analysis built off from Sunday, I didn't go ahead and rush into the sell. Oh, excuse me. I wanted to go ahead and wait for patience or wait for evidence within the market to go ahead and give us a telltale sign that we can go ahead and short this market. So once price went ahead and came into our zone here during London session, we actually do see a dip off and a bit of internal liquidity buildup before price coming higher. Now, I was kind of convinced that price wanted to come lower, not only because we had an institutional mitigation or institutional candle that necessarily really did not get mitigated, right? And we could now come into it. We also left some internal liquidity that was literally left, in my opinion, to be swept in a later move, whenever that move was to happen. So now focusing on a smaller time frame, once the New York Open came into play around 9:30 a.m. Boom. I'm just going to go ahead and highlight that for you guys. We're going to go ahead and play that a little bit. How price is now coming into not only after dropping off from sweeping that 1 hour supply area, we're going to go ahead, and what I saw is we're coming into a potential 15-minute institutional candle. So price actually inevitably does come into it. Now, I didn't want to go ahead and sell the market right here. In all honesty, looking at the NZD, USD, and DXY correlation, I wasn't necessarily convinced that dollar was going to have power today. I actually thought that NU was going to continue running up and up and up. So this was actually a great trade for me, my psychology, because this is a great trade to now reference to future trades, saying I need so much evidence that's blatant to me it's going to go in my preferred direction. And what did price do here? We went ahead and we tapped into that 15-minute area. We do still have no evidence of any break of structure, right? High to a low, high to a low, high to a low, high. No, market is continuing higher and higher highs. No, lower lows, right? If anything, just higher lows. Price does come up and now breaks internal liquidity, does leave a bit of a 5-minute imbalance. Market would, in my confirmations and analysis, does come up, touch the 5-minute institutional candle. That's where I'm gonna go ahead, and now I have a smaller time frame break of structure, a smaller time frame in my eyes, wyckoff, or just distribution schematic being played out for evidence. And now after that, price does inevitably done runoff, right? Using 10 a.m. news red folder as momentum to run in my preferred direction. Now it's really crazy because price gave us, going back to the 1 hour, a 1 hour institutional candle, right? That wanted us to go ahead and mitigate. That was my preferred take profit. Now on MetaTrader, on my broker, it did in fact hit it, but I didn't want to necessarily cut my profit short here. I wanted to just go ahead and partial 80% because zooming out on a larger time frame, right? This is a larger, much larger sell side schematic wyckoff that I think we can go ahead and take advantage of and start stair stepping down into potentially and hopefully breaking these lows over here during the Mark D phase. Right now, we are just in a Mark C phase, right? So still a few more phases to go before that major sell-off. Price did inevitably hit that 1 hour TP, didn't hit on TradingView. And so because of that, why is this here? Because of that, price then does run up, and I do go ahead and trail my stop loss. Obviously, once our stop loss was up here, once market went ahead and started to dip off, give me a 1 2 to 1 R&R. I wanted to go ahead and protect my profits, right? Using the last stepping stone for market to go ahead and, just not reverse any higher against my profits. Price does go ahead. We start to climb up, and it does tag me out, which, happy and grateful because I was still able to secure profits and partials along this drop and retracement back up. But it's also just kind of crazy because if we just follow the market for the rest of the day, we do inevitably get this push not only down into the TP, but actually potentially going a little lower. But that was my breakdown for NZDUSD. That was the reason why I took this trade, and it was just really just based off of wyckoff distribution schematic, distribution evidence, and lower time frame confirmation within a higher time frame bias. So cool. Thanks for watching. Make sure to like, comment, subscribe, and see you guys next time.